Hello and welcome to Dashboard FX. Now today I'm going to talk about trend lines. When people hear about trend lines and they go and read about them, they see them, they go, oh, I know what he's talking about. And this isn't just me, this is the education I've been through as well. I see it, or I saw it at the time, went and drew it, and I couldn't trade it. So you get trend lines which go across the screen, very easy to trade in, but all that's showing me is a flat market. So I'm going to attempt to show you the trend lines where they go sort of at a diagonal stage, and you've got to presume that this is a 4-hour chart. So I do tend to slow down the charts, so you'll practice on 5 minutes, 15 minutes, blah blah blah. Probably make more mistakes than you will make good trading decisions. But once you get used to the patterns and you develop yourself on your mindset, when you slow down the chart, you realise that these lines actually mean something to yourself. So I'm just going to try and explain the chart as I'm going to walk through it. I will pause the video. I'll then go and draw the line. It'll be exactly the same candle pattern behind me, so that's static. I'll then go and draw the line, and then in your mind you would have gone, okay, I get that. Then I want you to go away, find a 4-hour chart that you think you're comfortable with. Could be the pound. There's been a lot of volatility in the pound over the last 6 months, with it being, we're nearly in March 2017 now. And there's been a lot of, if you go back to May 2014 on the euro, you can see a clear pattern of trend line going down, going south, before the euro starts coming back up again. So what I'm going to do, just explain this quickly. So you've got your green candles when all the buyers are in the market, your red candles when all the sellers are in the market. And I always say this, the top of the chart here is roughly the top of the chart there. And you probably think to yourself, well, how can I make money if I sell at the top here when the market comes back on itself here? To you, that might be a losing trade. Okay. Now, what I'm going to do, I'm going to pause the video. I'm going to draw one line, and then come back to the video. So it'll be very quick for you, and very slow for me. So I'll be back shortly. Okay, so what you'll see now on the screen is a very clear blue line going through the chart. Now, when I initially drew the candles, it was all freehand. But because I know how the candles are moving, I haven't checked back to a chart or anything, I know how the candles move. I can see a definitive line on the chart anyway, just naturally. So when I drew these candles, I could see where I wanted this lesson to go. So I drew the candle pattern in a south direction. Now on the 4-hour chart, you can get in and out the trades as often as you want, or as little as you want. If you get in at the top and you say to yourself, okay, I'm going to sell, I've made the right decision, the candles are coming down, how do I stay in? And you want to develop yourself into saying, right, I'm in the trade, I've made 150 pips, how do I stay in? Okay, so you enter the trade here, you enter the sell trade here, market comes down, goes back up, now you start drawing your trend line. So you say to yourself, okay, there's a candle there, there's a possible line entry. You drag your trend line south. It doesn't matter how, I mean the lines are going to be straight, so it doesn't matter how long you do the line. You draw the line. Candles carry on going south, you get to this point, and then you have a quick uptrend. But it comes back and hits your support line. So that support line is telling you to stay in the trend. 4 hours go by here, nothing happens. 4 hours go by here, you've made the right decisions. The next 4 hours go past, you've made the right decision. The next 4 hours go past, you've still made the right decision. So from this point, your entry point, right down to here, we're talking a couple of days now, your method of getting into the trade was right, it was the right decision. You've hit your support line twice, it's come down here, it tests it again. So 4 hours go by, 4 hours go by, hits your support line, and then another 4 hours, 8, 12 hours, you still made the right decision. There will be so long before it gets to the bottom of the chart where you have to make the trading decision to come out. Now that could either be a satisfactory trade. So you say to yourself, I'm in at the top, I've made 650 pips on a 4 hour chart. That's very, very possible. I'm happy. 650 pips, if it was £1 a pip, £650, 2 days work. Very, very happy with that. I would be extremely happy with that. Market's hit the trend line 3 times, so you want to be looking at getting out. You're happy with 650 pips, brilliant. Now the market starts going back up. Now you will hear traders and forums and people such like saying, do I go long or do I go short? Okay? Now, long to me on a 4 hour chart could be for 2 or 3 days. So this trend line is long. It's a long position. I hold it in for a couple of days. I practice and practice for 2 or 3 months, and I know what I'm doing. So I practice on a 1 minute chart, 5 minute chart, 15-minute chart. I know how the trends are moving. I know when to get in and out of the trades. Everything's great. I know how to take a long position. Okay, but on a 4 hour chart, if this happened here, so the buyers think they can try and get in and dominate the market, 4, 8, 12, 16. Okay, 16 hours, you're not going to be sat at your MT4 for 24 hours, for instance. So there's a potential to take a short position. Simple reason. Okay, 2 candles meet at the bottom. So you started drawing your trend line. 2 candles have met at the bottom here. You've got a bit of a tail on your green candle. You could take a short position there. Now, short position is you in your mind's eye have said to yourself, 4, 8, 12 hours have gone by. There's a long tail on this pink candle. Okay, green candle, so the buyers have come in. You've started your trend line. Your trend line is only that long. Okay, you've only started drawing it. You can remove it. You don't have to start drawing it at that point. But when you start drawing a trend line, you're developing your mind's eye for that trading session. So your trend line's only that big. You started drawing it. It's a straight line, so it's not going to do that. It's not going to bend down. You've drawn it and it's straight. You might start off. Your trend line could be about there, but as the candles come back and you can draw a point between the top of that candle and the top of this candle, that's the start of your trend line, and you develop that trend line as the days go on. When it hits it for the 3rd time, I'll tell you what, you get so excited because you've made a good trading decision. Yeah, okay. So your experience will tell you that you've had a strong push down. The buyers are starting to get in. So you take a short position. You can buy there, right? Put your stop loss straight underneath it. You're not going to lose that much money. Okay. So your short position is, from your knowledge, that the base of the 2 candles is a sign that you can take a short position back up to the trend line. So you'll take profit is there. Your TP. Okay? Because you're only taking a short position. That might come up 100, 150 pips. It's good money, but you've left your selling trend in. Market comes back down again, so this is closed out overnight. You've gone to bed. Woke up the next day. You take profits come in, and then 4 hours later, you say it's 7 in the morning. 7 o'clock in the morning, you've gone, okay, I'm happy with that trade. Markets come back down. Buyers come back up and hit the trend line. Sellers are gone. There's definitely support, but it's definitely hit the trend line. So the sellers come back in and take more positions here. Again, 4, 8, 12 hours later, you spotted the 2 pause buttons. Comes up and hits the trend line again. You want to be thinking about taking that trade out. Comes back down. These 2 are not really telling you where the market is, but when you get a green candle with no wick at the top, that's a warning sign, because the market's come up that strong that the buyers haven't got out and the sellers are not getting in. They can see the buyers are getting in. Sellers turn into buyers very quickly. So you close the market out. You've got 600 pips here, or 650, depending on the market and the currency pair you're using. market's come up, you've got 150 pips there. That's a very, very good 2 days trading. You close your trade, your buyers come in, and now you want to know how long do you leave that trading. Okay, so this trade now, you're a buyer. You was a seller here, you're now a buyer here. This is where it gets clever. I'm going to pause the video and I'm going to show you support and resistance line. So now here comes the clever part. So you've taken, which is effectively phase one of your trading, you've taken a sell trend, which there are other videos to let you know how to get in and out of trades. This video is simply about how to keep your trade in. So going back to the beginning of the video, I did say that at some point you'll recognise that the candles did start at the top, market's fallen, so now you recognise how to stay in the market and when to exit. But at the beginning of the video you may have thought, well, if the market's come back up here, I wouldn't have made any money. So at this point, when the market does start coming back up, from the top point of your candle, so the wick, you draw a straight line across, and especially on a 4-hour chart, it does take a long time to come back to that. So you take the buy entry at the bottom of the market here, and your sell entry is simply where the support and resistance is. If you don't know what support and resistance is, think of it as the floor in your house and the ceiling. Is that the floor is supporting me, but at some point when the market comes back up, it's going to hit the ceiling. So it's either going to hit that and create resistance, and the market's going to fall again, or it's going to effectively take the market up the stairs, and you carry on going up to the next level. These support and resistance can be drawn at the 4-hour chart when you zoom out, and then you take the scroll lock off the screen. If you go back through your chart, you'll see patterns of where the candles meet the support and resistance, they crash through it, and 4 months later it comes back down, lands on the trend line, the support and resistance, and carries on going back north or crashes through and goes south. I tend to draw double support and resistance, so you'll see there's a wick area of that candle, and there's also a wick area of that candle. So from the top of the candle I would draw a support and resistance line, and above the wick I would draw a double line, which is obviously the second line, and then scroll back through your chart and you'll notice again that the wick area of the candles actually travels inside those trend lines. It's a very good skill to have, and it's another good way of getting in and out of your trend. So this is a long position. Remember earlier we would have took this position on a 4-hour chart and made around 650 pips. The short position was 150 pips. At the bottom of the market here, if you take that trade back up to the support and resistance, you made another 600 pips or thereabouts. It's about a week's worth of trading, and it's a very good stable way of trading on a 4-hour chart.